In this video, we're going to be talking about technical analysis for trying to predict the future outcome of a market. And in our case, we've been studying the Qs, and we're going to use technical analysis to figure out when we should be buying and when we should be selling. Now, obviously, you're not going to bat 100%. There's absolutely nothing that can tell the future. What you're doing here with technical analysis is simply measuring the buying and selling pressure. I don't know if you've heard this before, but there's really only one way for a market to go up, and that's if there's more buyers than sellers. And there's only one way for a market to go down. There's more sellers than buyers. And that's what makes a market move. Now, what's interesting, though, is there are patterns that you can identify, and you can take out from the charts that you see in front of you certain patterns that tend to repeat themselves over and over again, giving you some confidence as to what the buying and selling pressure is at any given time, and to determine whether or not that buying pressure is going to continue or not. And you'll also be able to tell when some buying is coming into the market and when some selling is coming into the market. So let's take a look at some charts and see what we can find. Now, this is the way I do technical analysis. You may have your own method, and feel free to use what I'm teaching you here, adding it to the method that you currently use, or don't use any of it at all. It's quite up to you, but it works very well for me. Now, first of all, there are many different kinds of charts that you can use. Now, we're looking at the Qs. I'm looking at currently at a 5-year weekly chart. You can do a 5-year monthly chart. You can do a 5-year daily chart. It all depends on what you want to see, how much detail you actually want to see in the chart. And then, of course, you can go into intraday charts. So you can use a 30-day, 30-minute chart. Each bar represents 30 minutes of time of trading. On a daily chart, we're talking about a single bar during a day of trading that took place during that day. If we take a look at weekly charts, we're talking about the range of prices that took place in any given week of trading. Same thing with monthly charts. You can even go to quarterly charts. You can go to yearly charts. For the most part, I tend to stick with monthly charts. And when I'm looking for an opportunity, I'll take a look at the monthly chart, and I'll try to determine from the monthly chart what I think the future price movement of that month is going to be. Now, in the case of the Qs, there's a couple of clues that kind of gave us an idea that the market was going to start dropping in 2007. Right after this monthly bar was created in October, we had the November bar in 2007, which turns out to be a red candlestick bar, indicating that the market had declined and the volume was up significantly. So it looked like some selling was starting to come into the market. If you were alert to that, there were many ways that you could have profited. The first thing I would have looked at, of course, is that one monthly chart, and then I would have drilled down into a smaller time frame. So there's many ways that you could drill down into this time period to find out what's going on. So in this case, I would drill down to a weekly chart just to take a look at it and see what's happening on a weekly basis. And if you take a look at this weekly chart, you're going to notice something in October, the 29th, which was the last day of, I believe that was the last day of trading for the month of October in 2007. If we kind of zoom in a little bit here, you'll see this little bar right here. This bar in candlestick terms is called a spinning top. There's a couple different patterns that identify reversal signals in the market. One of them is a spinning top. That means that there's a little bit of a stem down here, there's a stem above here, and then there's a small little body in the middle. And it does resemble a spinning top. If you've ever played with those as a toy, put them on a desktop and then spin the top, and they spin, and all you see is the bottom point and the top, and in the middle keeps on spinning and spinning. Well, what it does is it measures, and it's a representation of indecision by the market. The market went down, the market went up. This particular week, we're looking at weekly charts, and then it settled kind of in the middle in a very tight range. Well, what that shows to me is that there's a lot of indecision in the market. The market couldn't quite make up its mind whether it wanted to go higher, whether it wanted to go lower, and it just kind of stayed in a very safe range about where it opened for the week. And of course, look what happened the very next week. The market dropped dramatically here in a very, very large bar. It looks like volatility increased. The market declined significantly from the closing level of about 53 all the way down to 48. So that's a fairly large move for the Qs. A very similar pattern happened back here. We took a look at this pattern here, and it looked like a spinning top as well. Not quite as well formed as this one, but still a spinning top. And we had a similar result. The market showed indecision, wasn't quite sure if it wanted to go up or not, settled right in this middle range with a narrow close for the week, and the market declined significantly from that point, dropping from approximately the 49 level all the way down to the 43 level.